Hello, everybody. Welcome to this webinar that is titled Kickstart Stock Trading with Trend Following. Okay, today we are doing a very exciting topic because, as you know, strong trend makes investors money. And usually in a strong trend that many investors will make multi-bagger returns. Have you ever dreamed about having a few 100% return? This is a time where you need to look into trend following. And today we are doing this segment on trend following to tell investors how you can do trend trading using this strategy. And today we have got a very renowned speaker in trend following to come on our segment today. And this webinar is brought to you by Bursa Malaysia and managed by our company LifeChamp. And on the line right now, we have a few hundred of you on the line, and today we got an overwhelming response. This is the second sessions that for the Bursa webinar in 2021, and we are very excited. And this is in fact the first English session that we do in the year of 2021. So without further ado, let's go to the disclaimer. Now, whatever we share on this webinar is only for educational purpose. In no way that we give any recommendation or any buy or sell signal to any companies that we do case studies on. So for all your buy or sell decisions, you do it at your own risk. So whatever presented in this webinar is only for educational purpose. All right. So allow me to briefly introduce our speaker today. And he is none other than Jin Hao. Now, Jin Hao on the line with us now. He is a position trader in the capital market focused on stocks and futures. Now, he is the founder and chief master trainer of Street Finance. His signature program, which is Street Trader Intensive Program, allowing individuals to trade without monitoring and speculating. So if you are somebody who likes to trade the market without constantly monitoring the market every minute, now this is the master huh? So he is featured in media like City Plus FM, Borneo Post, as well as Sinchu Jipo. Okay, he also speak for regularly for Bursa Malaysia and other investment banks as their frequent invited guests to teach about retail investor in trend trading. And he's also a frequent speaker in university and colleges, sharing his experience to the young blood in the market on how they can succeed in the stock market. So without further ado, let me hand over the session to you, Jin Hao.
All right, so do I press the share screen myself?
Yes, I have just I've just stopped sharing my own screen.
Okay. All right. Please give me a moment. All right. So if you can see my slide and if you can hear me clearly, type yes in the comment in the chat box below so that I know that you can see the slide and hear me. All right. Okay. So a lot of yeses in the comment. All right. So without further ado, let's jump into the topic today. Okay. So as the title, okay, we have all already seen already. The title is Kickstart Stock Trading with Trend Following. So today I'm going to share with you how can you trade stocks with a very specific strategy called the trend following strategy that allows me, myself, and also my graduates, my team to trade stocks without monitoring or minimal monitoring, as well as zero speculation. So the first thing that I want to address, which a lot of people have many misconceptions or misunderstanding, even myself last time, okay, me included, is trading and speculating, because maybe affected by. Now, by the way, how many of you if you always thought trading is like speculating, a little bit like gambling, a little bit of the elements of gambling, okay? If you always think that trading is speculating, okay, type one in the chat box. Let me know that you think that trading is speculating. All right, so I see a lot of one out there. So I'm here to share with you things towards the right direction, because I used to think that way. So I'm right here. I want to share with you, trading is not speculation. Okay, trading is not speculation. Okay, so most people out there, including me myself last time, confused about trading and speculation. So the first time I get into the world of technical analysis, I apply all those things into things like penny stocks and all those whatever thing. Okay. And I speculate a lot. Okay. I speculate a lot. So while speculation, okay, is one of the types of trading. Okay. However, the reverse is not true, meaning that trading doesn't necessarily require speculation. So what is all this means? Okay. So actually, okay, speculation is just one type of trading. And there are many, many, many types of trading out there. Many types of trading out there, and speculation is just one of them. Okay. So as long as you buy with the expectation of selling with a higher price in the future, okay, you are actually trading, regardless how long or how short the time frame is. I repeat, I give you an example. For example, okay, if you buy a stock and you at 5 ringgit, for example, and you plan to sell next week at 5 ringgit 20 cents versus another person who buy the stock at 5 ringgit and he plans to sell it after 2 quarters, okay, with maybe 6 ringgit or 6.50, the expectation is always having capital gain in the future. Okay, these two guys are the same. Okay, these two guys are the same. So we always say to put everything in the simplest form. Okay, trading is buy and sell. Okay, buy low and sell high, of course lah. But sometimes you have loss. Okay, so trading is buy and sell. Okay, investing on the other hand is buy and hold. So that's why you don't see the legendary investors like Warren Buffett. He keeps buying and selling, buying and selling. So what he does is basically he buy and hold until the reason for him to hold the companies or shares is no longer valid. Okay, so this is basically investing. They will keep holding, keep holding, keep holding, keep holding until the reasons for them to stay invested, okay, is no longer valid. Okay, so trading, it doesn't matter if you decided to sell it within this week or next month or next year. You are trading because the expectation is to sell at a higher price. Okay, so trading, on the other hand, is all about managing risk. Okay, so I'll appreciate, okay, if you guys can participate along with me throughout this webinar so that you learn better. Okay, so when I ask you to type something, you type so that you remember better. Okay, so trading is all about managing risk. So type managing risk in the comment. Okay, so trading is all about managing risk. So a lot of people, okay, when they say, hey, I want to buy this thing, if this stock 6 ringgit go to 7 ringgit with my capital, with my position size, okay, I can make 100,000. Now, this is not the right way of looking into trading because, as I say, trading is all about managing risk. It is not about managing the return. It is not about predicting or expecting how much you will be earning. While speculation, on the other hand, does not focus much on managing risk, but on what? Taking risk. It is a little bit like gambling, if you will, things like that. Okay, meaning that if this stock I buy right now, if it go up 10%, I will make, okay, like 50,000, for example. So they look at the profit, they look at the potential profit, and they decide whether I want to take this risk or not. It is like if you have 17 points, if you are playing blackjack, you have 17 points on hand, you decide whether you want to take the risk or not. Okay. It is not about managing risk. It's decide you want to take the risk or not. Because if you take the risk, if you draw, for example, another card is 4, then you have 21 points. You take the risk. There's nothing called managing risk. So speculation is all about taking the risk. Of course, there are some risk management involved, but it is more like whether or not you want to take the risk. You are willing to take the risk. Okay, so the pace is very fast. Okay, so trading can be intraday, which is a little bit like speculation, okay, or scalping, some people call it. Can be short term, can be mid term, or even long term, up to a year or longer. And speculation is usually intraday to maybe less than a week. And in Malaysia, there's one term that a lot of people, okay, are familiar with, okay, is contra. Okay, a lot of contra players out there, okay, they are actually speculating. Okay, a lot of contra players out there, they are actually speculating. If you agree, okay, type agree. A lot of contra players out there, they are not trading, they are speculating. Okay, if I want to use another word, most of them are gambling. Okay, so I don't really like speculation. In fact, I don't like it. Okay, because I was from there. Okay, however, trading is not the same thing. You have a lot of trend traders, swing traders, a lot of people, different type of traders out there. And today, specifically, I want to teach you how to be a position trader. What is position trader? So position trader means a person who take a position and hold for a period of time. It can be like few weeks to few months. So to do position trading, the strategy that I'm going to share with you is, of course, is the strategy that I personally use. It's called trend following. So trend following, if we translate the meaning directly, it means you follow the trend. Okay, so if the trend is there, I'm in that position. I'm in that stock, for example. If the trend is not there, then I'm not in. Okay, so therefore, the first thing that I want everyone to, okay, I want to put everyone into a common ground. Trading doesn't necessarily require speculation. The way I trade is I don't monitor the market just like any other investors out there. Maybe only occasionally, okay, if I have an early lunch at 12, maybe while waiting the food to arrive, I log in for 1 minute. Okay, that's it. It's not like having a quote panel in front of you. Okay, that makes your emotion, that makes you even more emotional. Okay, so introduction to trend following. So I want to ask you whether or not you encounter such situation. Okay, the first one is, okay, you look at the stock, whatever stock it is. Okay, the stock price has been dropping. Okay, dropping, very attractive. Okay, and it looks cheap. Okay, it looks cheap. So what you do is you buy the stock. However, after a period of time, maybe 1 week, 2 weeks, 3 weeks, or 1 month, the stock just becomes cheaper and cheaper. Another situation is you look at the stock. The stock price has been going up and up and up, and you feel like it is very expensive. Okay, and you feel like you are late for the party, meaning that, yeah, I late already. I cannot buy this stock already. The stock run already. Okay, too high already. You end up not buying it. However, the stock price just moves higher and higher, and you always feel like last week or last month or yesterday was the best time to buy. If you ever face this scenario, okay, type 2 in a comment, number 2, type 2 in a comment. I want to see how many of you actually face this kind of situation always. Okay, so I see a lot of 2. This is very common. Okay, this is very common. Okay, and today I'm going to share with you why, from the perspective of a trend follower, we do things differently. Okay, so if you're ready, then let's move on. I want to share with you, before I share with you the how, okay, I want to share with you the core beliefs of trend following. Okay, for us, trend followers, we call ourselves trend followers. Okay, some they say trend traders, but I think to be more precise is trend followers or whatever they call. Okay, trend followers. The trend for us, okay, the trend is more likely to continue rather than reverse. Okay, the trend is more likely to continue rather than reverse. Second, okay, an uptrend, it means a trend is more likely to continue than reverse is actually like this. Okay, an uptrend has a higher probability to go up. Okay, and a downtrend has a higher probability to go down. Okay, so let me give you an example for each. But remember, this is not a buy and sell call. This is just an example. Okay, now uptrend, higher probability to go up. Do you see any tech stocks, for example, in the past? Okay, I think tech stock has the most, tech sector has the most example. For example, stocks like MPI, stocks like VTROX, stocks like Greatech, stocks like UWC, stocks like DNO, they always go up and you don't know how to buy. Okay, the only thing you can do is you sit there and see the stock fly every day. Okay, this is an uptrend because in an uptrend, it has a higher probability to go up. Okay, so the next thing is I want to share with you is uptrend does not go up in a straight line. Uptrend does not go up in a straight line. Okay, so for example, okay, let me try to annotate. An uptrend, they don't go up in a straight line. Okay, they go up like this. They go up, they rest a while, go up, rest a while, go up, rest a while, go up. Sometimes the rest is a little bit longer, then go up again. Okay, so that's why in an uptrend, for me personally, I like to see the stock retrace a little bit, meaning that it pull back. Okay, and what I do is if it recovers and turn up, showing some signs of recovery, meaning that an uptrend is trying to go up again, then I can try to plot my entries. This is basically what we do. And in a downtrend, okay, in a downtrend, again, a downtrend does not go down in the straight line. It goes down, okay, then it might go up again. But it just go down after that. After a little bit of rally, it goes down, okay? And it go up again, go down again. So if you're familiar with some of the terms, we call it lower highs, lower low. Again, downtrend does not go up. A downtrend does not go down in a straight line. Okay, so go down, then suddenly people buy again, then it go down again, then maybe Busa bets come out with something fantastic. Okay, then suddenly it go out again, then eventually it goes down again. Okay, then suddenly something happened again, it go up again, then come back, and today go up again. Okay, now a lot of people, they always look into buying downtrending shares, but as a trend follower, I know that a downtrend has a higher probability to go down. That's why, for example, since last year, I'm not looking into glove stocks, for instance. Okay, why? Because glove, the entire sector, and also the stocks, of course, okay, they are in a downtrend, so it has higher probability to go down, and that's why I don't buy. Okay, yes, things happen, like sometimes it can go up a bit. Okay, like Busa bets come out with something. they try to gather, and then boom, the share price push out a bit, then it go down. Then something happened, and then the share price go up. Whatever it is, it will go up for a while, then go down. Go up for a while, then crash again. Okay, so this is what we call downtrend. But for us, we don't care what is the news, what is the whatever thing they want to whatever news. Okay, we look at the trend only. Okay, if the trend is going down, whatever stories, whatever things people put up is not important because the trend is still down. Another example is a lot of people like to speculate. Okay, a lot of people like to speculate. What they like to speculate? They speculate like, okay, like last year, they speculate that maybe things like construction sector will go up. Okay, construction sector will go up because of maybe budget, things like that. Okay. But when I look at the chart, okay, construction stocks, most of them, they are not uptrend. So, well, if it is not uptrend, then I wouldn't look into buying. Okay. So the next thing that's very important is trend traders or trend followers. We will look into going long in an uptrend. Going long means you buy low and sell higher. Okay. You buy low and sell high later. That is go long. You buy first and sell later. And also, for some of the professionals, if you are not trading Bursa stocks, okay, if you are trading like futures, okay, futures in Bursa futures, you can go short, okay. Like for example, if you think that index will go down or the FCPO will go down, you can do short. Short means you sell first and buy back later, okay. So for stocks, okay, we only buy. So that's why we only look into uptrend. Okay, so trend traders and trend followers like us, we will only look into going long or buy the stock if the stock is in an uptrend. So if it is not in an uptrend, we wouldn't bother it. Okay, we wouldn't bother it. So if you change the mindset like this, okay, if you change your mindset to this, meaning that if the stock go up, you look into buying. If the stocks go down, you don't look into buying. If this mindset you were to learn half year ago, do you think you can perform better? Okay. If you use this mindset half year ago, do you think you can perform better? If you think you can perform better, type yes. Okay. Type yes in the comment. So I believe that some of you might say, oh, I will sell this and that earlier because it's downtrend. Or some of you might say, okay, I might buy into some of the stocks that are uptrend, maybe DIY, maybe some of the tech, maybe some of the steel, maybe anything. Okay. So this is a thing that you need to start realizing, put it in this way. Okay. So, and the next thing that I want to share is, okay, trend followers determine position size, meaning that how much to buy at the entry based on the initial risk. Okay, changes in price will lead to gradual increase or reduction of position size. Okay, so one thing that we do differently is this: when the stock keep going up, we keep buying, keep buying, keep buying, keep buying. When the stocks starts to not so good, looks like turning down, we reduce, and eventually we will exit the position. Okay, so this is what we do. Okay, so for example, a long only stock trader. What does long only stock trader? Meaning that a stock trader that only goes long. Okay, meaning that we don't short. Okay, so a long only stock trader will add more position as price goes up and reduce or even eventually exit the position as prices go down. Okay, so this is what we do. Okay, so now example of an uptrend, D&O. Now, I tell you one thing, you see, we as a human, our natural instinct is when that thing go up, we always feel that the best time to buy is last year, is last month. Okay, like and we always feel expensive when we see the number goes higher and higher, just like D&O. Last year, okay, after the COVID-19 crash, okay, I call it COVID-19 crash, but it's basically last year, February to March correction, exactly 1 year ago. Okay, it goes to the low of about 50 cents and it goes up to 1 ringgit. At that point of time, a lot of people say, wow, 50 cents to 1 ringgit, already 100% gain. You feel like, okay, you feel like you're missing out. Okay, you missed the boat already. Okay. However, for trend followers, we will keep watching or even start buying. Okay. We will keep watching or even start buying. All right. How many of you when you see the stock like this, the bottom was 50 cents last year, March, and at August, you see, wow, 50 cents goes to 1 ringgit, you think you're late already. If you think you are late, type late. Okay. If you think you're late, always feel that. Okay. Type late. Actually, I feel late as well at when it is 1 ringgit. Okay. And when it is 2 ringgit, I feel I'm late as well. But I found an opportunity to buy. After that, I found an opportunity to buy and I buy. Okay. So right now, of course, I feel that I bought earlier. Okay. And you always have that feeling, I should have bought earlier. But anyway, once you learn trend following, you look at the right stocks. Okay. Then you will maybe start, okay, changing your perspective. But of course, right now, shoot so high already. Don't blindly chase lah. Okay. You need some skill. Okay. And also you need to see the situation whether or not you should look at this counter or other counters. Okay. So an uptrending shares, it will always make you feel that you are late. It will always make you feel that it is expensive. Likewise, for downtrending shares, it always makes you feel that it is cheap, but maybe next month cheaper. Okay. So this is an example of uptrend. So uptrend, apart from higher high, higher low, and try to analyze all the highs and lows, one thing that you need to see is maybe at least every 1 or 2 or at least every 3 months, this stock is creating a new high. Okay. At least every 1 month to 3 months, this stock is creating a new high. Okay. So next thing is example of an uptrend, MPI. Okay. Example of uptrend MPI. So you can see that it goes all the way. Okay. Let's say August, you look at this share. Okay. It go up and it pulls back. If you just now still remember, uptrend does not go up in a, okay. Uptrend does not go up in a straight line. Okay. Uptrend does not go up in a straight line. So what we do is we wait until it retraced. And if it turns up, we maybe start watching or buying. So right now you can see maybe this one, maybe this one. Okay. Maybe this one. Okay. Later I'll give you more example. Okay. So this is again another example of uptrend MPI. So next we look at this one, Top Glove. Okay. Of course, today go up. But again, those people who have bought like last month or few months ago, of course, maybe they are not even break even just yet. Okay. So again, this is the example of uptrend turning into a downtrend. Okay. Later, you will learn one strategy called stop loss or trailing stop. Okay. That brings you out from this stock. Okay. When things turns from an uptrend to a downtrend. Okay. So you can see that it keeps going up, going up, going up. Okay. And it turns down. Suddenly the stock becomes very volatile and it goes up again. Then boom, come down. Okay. So this is what, okay, an uptrend turns into a downtrend looks like. Okay. So, and this is an example of downtrend. Although towards the end of this chart, you might feel that it is turning up, but again, you need to wait until the trend really established. You don't want the stock to go up this week, then next week it erase all the gain, then no point. Okay. So I always wait for more confirmation. Okay. I always wait for more confirmation. Now, before I share with you the strategy part, the practical part, okay, let me share with you some pros and cons of trend following. Okay. Now, the first one is ignore short-term market noise. Okay. Now, short-term market noise is like suddenly there's some news. Okay. Suddenly EPF buy. Suddenly the company, the factory got how many people kena COVID-19. These are short-term market noise. Okay. So, mind you, trend following is not a short-term strategy. Sometimes you can hold a share for more than half year or even more than a year. It is by all means not, okay, a short-term strategy. Okay. It is more like a mid-term, maybe towards the mid to long, okay, when it comes to trading. Okay. I would say when it comes to technical analysis and trading, trend following is one of the strategies that requires the strongest, the longest holding period. But there are some pros and cons. The pros, of course, first one is ignore short-term market noise, meaning that the stock go down 3% today, like 5% this week, doesn't really matter much. Okay, of course, you have your stop loss, things like that. we only look at the trend, okay? Whether or not the uptrend is still intact, whether or not it is still there, okay? Next, monitoring is optional, okay? Sorry, is optional, okay? So you don't need to spend your time, okay, monitoring, okay? Now, I just want to see how many of you, okay, you have a 9 to 5 job, meaning that by right you should not be monitoring the you should not be monitoring the market while you're working from 9 to 5, okay? So if you're one of them who has a daytime job and you have no time for monitoring, okay, type no time in the comment section so that I know that you have no time to monitor the stock market, okay? All right. So trend following, the strategy is, okay, the good thing about it is it doesn't require us to monitor, okay? Maybe minimal monitoring if you still want to, but I actually like it because do you agree that the more we monitor, the more emotional we become? If you agree, type emotional. The more you monitor, the more emotional you become. Okay, it is like, wow, the stock dropped 3%. Wow, very, okay, very emotional, very worried, very scared. But you look at the chart, hey, nothing there. Okay, so actually, it makes us more emotional. And the next thing, the next pros is no speculation is involved. Okay, no speculation is involved. And one of my personal rule is I don't really look at those heavily speculated stocks and also some of the penny stocks that has the history of speculation or pump and dump play. Okay, if you're in the market, you know what's pump and dump. Okay, suddenly the stock can go up like 100, 200% in 2 weeks. Okay, so we avoid those. Okay, so next is low trading frequency. Okay, paying less commission over the long run. This is good. Okay, I think this is good. Lower trading frequencies, meaning that you pay less commission over the long run. I have seen a lot of contra players, speculators. Yes, they make money here and there. Okay, when the market is good, they have like 10, 20 winning trades. And when the market suddenly retraces like last week, then they will hit like 5 to 10 stop loss, and the whole week they don't make any gain. Okay, I'm not trying to suggest that trend following is the best strategy, but I would say it is a trading style that will let you pay less commission over the long run. Because one of my friends who is actually quite professional speculators, okay, not to say speculators, but very short-term traders, okay, the trading, our portfolio is about the same size, okay, his brokerage fee that he pay, okay, maybe maybe after trading 10 years, only I pay that amount of brokerage fee. Okay, so if you're not good in short-term trading or speculation, okay, meaning that you cannot be profitable, the only thing is your broker will become richer and you will become broker. Okay, so the good thing about trend following is you pay less commission over the long run, because a lot of time we hold good positions and we don't go in and out very often. Okay, so next is higher average gain, better risk reward. Okay, because if it is in an uptrend, we keep riding the big trends. Okay, we keep riding the big trends. In a way, is we risk one to make many. Okay, meaning that now sometimes I want to give you guys a little bit about risk reward ratio. Now, from a professional angle, okay, some people might say, "Oh, this guy make 100%." It sounds good, but I think that this statement, there are a lot of missing puzzles. The first question you want to ask is, yes, he makes 100% from this trade. How much he risks to make this 100%? Okay, I think this is a more meaningful question to ask. Okay, how much he risks to make this 100%? If he risks 50% to risk to make this 100%, then the risk reward is only 1 to 2. Compared to another person whereby he risks 10% to make 30%, it doesn't sound exciting. Okay, it doesn't sound exciting by all means, but the risk reward is 1 to 3. That is way better. Okay, so risk reward ratio is very important. So if you understand this part, type risk reward in a comment. Okay, so how much you risk to make that reward is very important. Okay, a lot of people, when they speculate, wow, I make 10%, wow, I make 20% from a penny stocks going from 40 cents to 50 cents, for example. Okay, but do you think, you just take a step back and think, if he buy this stock at 40 cents, how much he's actually risking? 2 cents, 4 cents, or 6 cents? Okay, I think this is very important. That's why I say trading is all about managing the risk. The first thing that you need to know is how much you are risking to potentially, make a reward. I think this is very important. Okay, risk first, profit second. Okay, so all the good stuff. Okay, what about some cons? First thing, win rate can suffer, sometimes, especially during a choppy market, meaning that the market is not going up, it's not going down. Some of the stocks, they go up a while, then go down, go up a while, go down, meaning that there is no big trends in the market. Okay, there's no big trends in the market. So sometimes in this kind of situation, you can suffer a little bit when it comes to win rate. But this is true, for many other trading strategies as well. Okay, this is true for many other trading strategies as well. Okay, if you trade in 2018, you know that the market is not that friendly. Okay, 2018 in Bursa Malaysia. Okay, in Bursa market. So during that time, your win rate can suffer a while. But again, all the history, the market, the time whereby the market has trend is longer than choppy market. Okay, so we have a lot of opportunities. Next is challenge. It is very challenging to write big trends. Okay, even if you have the skill set later, it will still be quite challenging. Okay, but with some practice, with some techniques, definitely you can write the big trends. Okay, so from our practices, I'm not trying to guarantee you anything and things like that. Okay, but for us, it is quite normal to capture a trend that is 50% or 100% or even more. Last year until this year, we hold a position up to 200 to 400%. Okay, so if your entire portfolio, if your risk management is spot on, if you win, you write a big trend, that one stock can allows you to hit a lot of stop losses before you are back to square one. A lot of traders, they have some problems. It's like, last year, glove stock, they make a lot of money. When glove stocks go up, they make a lot of money. But when the glove stock goes down, is when it becomes less performing. They can lose what they have made and maybe lose even more. Okay, this is not good. Okay, this is a sign that that person, the risk reward and the risk management as a whole is not doing well. Okay, so trend following, the good thing is risk first. Okay, later you will know how. All right, so I'm going to share with you, my way of plotting a trading plan. My ways of plotting trading plan. I'll give you the process, because I have time constraint today. I have like 20 minutes left. I give you the process, and then you use your own way and see how you can fit into this process. This process is like a formula, and we have been using this formula, all this while, meaning that there is nothing hidden. This is the thing that we use. All right, so if you are ready, type T.E.S.T in the chat box. This is the process name, T.E.S.T. All right. So now trend follow stocks with 4-step T.E.S.T process. And these are the 4 steps. First is trend. What does trend means? Trend means we want to make sure the stock has a trend. And again, for stock traders, what trend are we looking at? Type in the comment, what trend are we looking at? So 4-step, the first T, okay, is trend. Okay, very good. I see people type uptrend. Okay, so we want to look at uptrending shares. So tonight, okay, your job later is to find what are the stocks that are in an uptrend. Again, uptrend doesn't mean that you have to buy directly. You just want to compile a list of stocks that are in an uptrend. Okay. Now, if you guys don't believe how trend following works, you also do the same thing. You find a list of stocks that is in an uptrend, maybe 20 stocks. Okay. And you also find another list of stocks that are in trend but downtrend. After 3 months, okay, or 1 month or 6 months, you see how many of the uptrending stocks create a new high and how many of the downtrending stocks actually go up. Okay, you can do this exercise yourself. Last time I had a podcast, okay, and there are actually a Taiwanese guy, okay, listen to my podcast, and towards the end of the podcast, I suggest them to find 20 stocks in their market that they are trading. That guy is trading the Taiwan market and also US market, and to find 20 stocks that are uptrend and 20 stocks that are downtrend. The best uptrend stocks you can find, all-time high stocks, okay, and some are maybe the 52 weeks low, okay, separate into 2 lists. You have to see how it works. It's all about probability. Okay, so back to this one. First step, trend. Find a list of stocks that are in an uptrend. At least 10 to 20 right now in Malaysia market, you can find. Okay, so next is entry. Okay, later I will go through with you how can you find entries. Okay, next, remember, if you have an entry, you must have a stop loss. Okay, if you have an entry, you must have a stop loss. Type stop loss in the comment. This is very important because stop loss, okay, prevent us from what? From stop loss prevent us from accumulating more losses. Okay, so this is very important. Okay, from big loss, from accumulating, okay, losses. All right, so a lot of people say, hey, if I buy now, if it hit my stop loss, okay, I stop myself up, okay, and then it go up. How? I said that's not a big deal. You can always find a time to buy back. Now, people always think that if I buy a stock, okay, and then it hit my stop loss and then go up. How many of you faced this before? Type me, okay, type me. Meaning that you stop yourself out, okay? You buy a stock, then hit your stop loss. After a few days, the stock rebound, go up, then create new high. Then you are like, what? Okay. Now I tell you, this is not the most disastrous thing in the world. Okay. If you always face this issue, okay, at least your capital is protected. Okay. And one thing that you need to do is the way you set your stop loss need to be refined. Okay. Now you think another flip of the coin, another side of the coin. Okay. Someone who buy the stock, when it hits stop loss, he say, "Hi, don't lah. Later sure rebound one. This company very good one." Okay. Then after that, the stock drop another 10%, another 10%, drop 50%. This guy, okay, will have a feeling later, okay, I cut or don't cut doesn't matter anymore. I put 10,000 into this stock. Now I cut left. It would put that person into a situation whereby cut or don't cut doesn't matter anymore. Okay, this is not a good practice. Okay, you don't protect your capital. This is worse. Okay, so got entry, must have stop loss. If you don't know how to set a stop loss for that scenario, for example, don't buy. Okay. The stock market has a lot of stocks. Okay. Okay. So the next is, if your stop loss is hit, then you're done with this T.E.S.T process. You don't have the last T. So you repeat the process on another stock. Now, then after that, the next is when your stop loss is not hit, what you want to do. So for example, you buy a stock at 2 ringgit. You set a stop loss at 180. Of course, when the stock go to 250 and 3 ringgit, your stop loss cannot still be 180. What you can do is, the first thing is, maybe you take some profit. Or there's one strategy called trailing stop. Okay, what does it mean by trailing stop? So trailing stop, it means when the stock, okay, is going up and up and up and up and up, what we do is, our initial stop loss might be here. We move up our stop loss, we move up our stop loss, we move up our stop loss. This is what we call trailing stop. So I buy a stock at 2. When it goes to maybe 230, I move my stop loss maybe to break even, $2. Okay. And when the stock go up to 250, I move my stop loss to 220. When the stock go to 280, I move my stop loss to 250, for example. Okay. So next thing, of course, I want to share with you is, okay, the practical part. All right. So step 1, make sure it is uptrend. So if you can see that this stock is an uptrend, type up. Okay. Type up. This is just an example. Okay. This is just an example. Okay. Not a buy or sell call. So again, of course, you might think that things right now, what I present to you is retrospectively presented, but do some practice. Okay. Do some practice. Okay. So uptrend. First thing, first step already done. Uptrend. So next thing is, I see a turnaround. So again, we want to buy, we want to wait, because the stock cannot go up forever. Okay. The stock cannot go up forever. Even if it is in an uptrend, it cannot go up forever. It will pull back. Type pull back. Okay. Pullback. The stock will pull back. So what I do is, I wait for a pullback. And when it starts turning up, okay, when it starts turning up, okay, I look into buying. Okay, so type turn up. Turn up means the stock U-turn go up lah. Okay, now why I don't buy a stock when it is going down? The reason why I don't buy a stock when it's going down is because you don't know where it will turn up. Maybe it goes down and crash another 10-20% before going up. Then that's not a good uptrend already. Okay, so I wait until it's turn up, because turn up, okay, turn up is a sign of trend continuation. Okay, trend continuation. I'm not sure if I spell wrongly, but trend continuation, meaning that it is a sign of recovery, resuming the uptrend. Okay, so when it turn up, what I do is, I look into entering when it turn up. Okay, when it turn up, I look into entry. So this is what I call plot and entry. So it's very simple. Right now, if the stock that you are looking is in an uptrend, first step done. Okay. Second is plot and entry. Very simple. If you look at the stock, there are only 3 things that it can happen. Is it 3? Okay. First thing, the stock is going up without pullback. Then what you do is, you wait for pullback and see where it pulls back to lah. Okay. If the stock right now is already pulled back in the midst of correction, pullback, what you do is, you wait for it to turn up. Okay, that's the second scenario. Third scenario is, you look at the stock, it is uptrend, already pulled back, looks like turning up, then opportunity. Okay, so wait, you need some patience lah. Okay, you don't look at the stock like maybe like whatever stocks that are every day going up. You see, no opportunity lah, cannot lah, too high already. This is not the right mindset. So what you do is, you put that into your watch list. Every night after your dinner, okay, spend 5 to 10 minutes time, look at the chart of the share and see whether or not they continue to pull back, or they turn up, they rebound a little bit. Okay, so Again, if it turn up, then it gives you an opportunity to enter. Okay. Now, next, if you got entry, you need to have what? Got entry must have what? Okay. Got entry must have stop loss. So how we set a stop loss is this. We identify the previous swing low. Okay. Somebody says stop loss, baby. Yeah, stop loss, baby. Okay. So we identify the swing low, meaning that the previous retracement, the lowest point. Okay. And then we put the stop loss below the swing low. Okay. So maybe I draw it here. Okay. So it turns up, come down, it go up. We identify the swing low and then we put the stop loss below it. Okay. Why we don't put exactly at that point is because sometimes it can be like this. It squeeze a little bit lower, okay, by few cents, and then boom, go up. Okay. All right. So this is very important. Somebody says support line. Yes, support line as well. You can put below the support because sometimes a stock can go squeeze below a support levels and then go up. Okay. So leave a little bit of space. Okay. So next, okay. After that is the stock go up. What you do is you move up, become a trailing stop. You move up, become your trailing stop. Okay. So this is how we get things done. Okay. Trailing stop. So meaning that for trend followers, we don't set a target how far the trend can go. Okay. We don't set a target because sometimes, okay, sometimes a trend can go up 100%, then it goes down. So if it goes up by 100% and then it goes down, then okay lah, I take profit with 80% gain. It's still good. Okay. If it goes up by 500% and then turn down, then okay lah, my trailing stop may be at somewhere 450 or even 400. Okay. So meaning that how far the stock go? Okay. How far can the stock go? Then I let the stock go. I don't set a target. Okay. I don't set a target. Okay. So let me give you an example since I still have a little bit of time. Okay. So let me share with you one interesting thing. Okay. So you see, maybe when the stock go up, somebody buy at 2, my friend. Okay. And then the stock go up, come down, go up, come down. Okay. Then maybe go up again. He take profit at 2, maybe 60 cents, which is 30% gain. Okay, 30% gain. Maybe this one is only I don't know, less than 1 month. Okay. Now less than 1 month, 30% gain. How many of you think is good? If you think it's good, type good. Okay. My friend sell at 260. Do you think he is happy? Okay. Do you think it is happy? I see some people type damn good. Wait until you see. Wait until you really see how trend followers make money. Okay. Let me share with you one thing. You think 260, he will be very happy? Let me give you the exact answer that you will all agree. He will happy if the stock is at 260 or lower. That's the fact. If the stock go to 265, maybe not that happy. Go to 270, not happy. Goes back to 260, 250, happy. Okay? We are all human. Our main enemy is emotion. Okay? Is emotion. Type emotion in the chat box. Our own enemy is always the emotion. So this particular friend, next time, okay, this is exactly true story. He buy a stock at 3. Okay. The stock go all the way up to 390. Okay. Now, because last time he buy the stock at around 260, then it go up a bit, then crash. Then he feel he very pro. You see, I sell at 30% gain. I tell you stock cannot go that high. Whatever goes up must come down one. Okay. We human don't be greedy. Okay. 30% very good already. Okay. Your FD don't even have 3%. Okay. So now, the next time he buy a stock at 3, the stock again, same thing. In less about a month, okay, it goes up 30%. He sold at 390. 30% gain, ma? Happy, yeah. When the stock go to 4, then he said, hiya, must come down, whatever go must come down. Last night, I also 30%. It got a while, then come down. Okay. After that, it goes to 450. Okay. Wow. Not same already, huh? Okay. Then after that, go to 5, 6. He emotionally bought back at 5 point something. Okay. Because he think that he have already missed up too much. Okay. He buy without having a stop loss because remember, he made that decision emotionally. And then the stock come down. Do you think he has a stop loss? The answer is no. And that's why he lost. Okay? That's why he lost what he has made during this period of time. Okay? During this period of time. So this is, I believe, what happens to a lot of investors and traders last year. Let me share with you how trend followers do things. Okay, there's one particular stock, not only one, a few, but I give you one example. I don't have to mention the counter name, but just give you an example. Let's say I buy at 250. Okay, set a stop loss below that. So when the stock going higher and higher and higher, what we do is we just move up, move up, move up, move up, move up. So if the stock can go to 10 ringgit, I let it go to 10 ringgit. Okay, so maybe after that, when it hits certain trailing stop, at least okay, from here to here, okay, I acknowledge that this is the high and now it is turning weak, I sell. Okay, so I let the trend run until it is exhausted. Okay, when it turns down, it sells. Now, this range can be 100%, it can be 200%, it can be 300%, it can be 400%. Okay, so this is for me is the beauty of trend following. Okay, and we have done it for many times, 50% gain, 100% gain, and more. Okay, so with this strategy, you don't even need to have a high and nice win rate in order to stay profitable. Okay, so next is example of a stop loss. Again, nothing is all good. Okay, nothing is all good. Let's say you think that this is a turnaround. Okay, recently this is the case. Okay, you think that this is a rebound. You buy, and after that it hits your stop loss. So when it hits your stop loss, then never mind. Okay, you already predetermine the risk. You buy here and sell here. You expect you will hit the stop loss, how much you will lose. So for example, maybe the stop loss is, for example, 10%, and your 10% stop loss will make you lose 1,000 ringgit. So if that's already predetermined, you're okay with it. You sign a contract with the market in your heart, you sign a contract with the market. Okay, with that stock, if you hit this level of stop loss, I'm going to sell you and I take the loss. That is predetermined. Okay, that's predetermined. Okay, so when it hit, you run away because you already expect if things are going to turn sour, that's the amount of loss that you're going to take. Okay, so if it were to go up, rebound later, we replot the entry. Okay, now the next thing I want to share very quickly is using an indicator called super trend as a trailing stop, especially if you have big gains. Okay, if you have big gains. Okay, so super trend can be found in TradingView and some other proprietary trading software, but TradingView is free. So you go to the indicators list and you type super trend without the space bar, super trend. Okay, and then you click the first one. Okay, anyone will do. Okay, so and then for example, you buy the stock. Okay, when it break out here. Okay, you buy the stock, for example, when it break out here. Okay, and it move all the way up. So what you do is basically just move up the stop loss. Okay, and if you don't know how to move, you are lazy, you use trailing, you use super trend. this line would be your trailing stop, because you see the idea of trailing stop is to move up, and move up. Okay. And in this case, the characteristic of the super trend, when it is green, it always go higher and higher and higher when the stock go up. Okay. So this is a good one. Okay. So again, this chart is plotted on 1st March. What's the price already? You go and check what's the price. Okay. So not always things are that good, but when you are in an uptrending stocks, okay, sometimes things may surprise you. Okay. Sometimes things may surprise you. So you got to know how to move up your stop loss as well. Okay. So this is one of the way to use as trailing stop. So another one is, again, it's the same thing. I think this is visually very easy to understand. Okay. You move all the way up. Of course, this stock right now, it turns down a little bit, not yet hit the stops. But again, this is a guideline for you, okay, for you to set your stop loss. Okay. So if you see in the past, okay, green, red, you sell, I think you can save yourself from one maybe downtrend or sideways. Okay. So you can go trading view and search at these indicators. It's very easy to use. Okay. And you maybe search for some stocks that you have bought before, and you see how this super trend can guide you. Maybe, let's say you see, okay, last year I was in this, for example, glove stocks. If I sell when it turns red, does it save me from extended loss, from more loss, for example? Okay, so for example, if I have bought some stocks, okay, maybe I bought D&O, but I sell too fast. Okay, if I use this super trend, can it help me to maybe squeeze more profit or not? Okay, so use this as a guideline. Okay, not a buy and sell call, but use this indicator as a guideline. All right, so how many of you think that these sessions has been very informative and useful, and you have been benefiting from it? Okay, type number 6 in the comment. Okay, number 6 in the comment. All right, so I have been talking for like an hour. So thanks very much for your time, and you guys are very attentive. Okay, I must say, you guys are very attentive. So thanks for the time. And right now, I think I'll pass the sessions, okay, back to Shane. All right.
Thank you so much, Jinhao, for very insightful sharing on trend following and what are the strategies. What is your strategy when it comes to doing trend trading in the Bursa Malaysia market?